Welcome to this week's Market Outlook webinar. If you're watching the recorded version of this, it was held live at 12:30 on Wednesday, September the 14th. This is a webinar that we do every week about this time with Aondo. I'll just put the risk warning up while I'm chatting away. And it's a look at the major markets, the major currency pairs, stock market indices, and some of the commodities to see where the opportunities might be in the days ahead. If ever you miss one of these, you can always watch the recording. Like I say, it happens live every Wednesday. You can fire in any questions as I'm going along. And also every couple of weeks, I do a webinar on social trading with Aondo, which is all about finding traders to follow. The last one we did was last night, and if you need a link to the recording, I think I put it on my Twitter feed yesterday, so you can access it from there, or drop me an email. I'll give you the contact details afterwards, and you can get in touch that way. But let's take a look at what's going on. A lot has been happening, particularly in stock markets in recent days. But for now, I think let's start off with some of the currencies. We saw clearly the Dow plunge towards the end of last week, bounced back on Monday, and a little bit sort of choppy and sideways yesterday. We'll take a good look at the stock markets in a sec. But first of all, we'll start off with something we were looking at last week, and this is Euro sterling, and I still think it's maybe the FX market to watch in the days ahead. Just to recap what we were looking at, we had the surge in the euro, obviously, on the EU referendum vote, pushed to a high, pushed to about 86, then it sold off, and during August it pushed higher again, up to 87, and I think when we were talking about it last week, we would have been around about here, and I was suggesting that maybe that correction is over. It's moved quite a bit quicker than I thought it would, but I think this is on the hourly chart now. That's what I was looking at. So when we were here a week ago, we were down about here, and I think it just started pushing through the highs of the previous day. And since then, it's gone on to move another 100, 130 points or so. And I think we have seen now this shift in euro sterling, helped by the weakness in the pound as well over the last few days. We'll take a look at that next maybe. But I think we have seen a shift now in euro sterling, and it looks like the bulls have got the upper hand again. So for me, that's this trend here. That's the relevant trend for euro sterling at the moment. So I'd probably be looking for buying opportunities, I think, in euro sterling. It'd be interesting if we got a dip back towards the 84.50 level. I think that would be one buying opportunity. It's always difficult, I think, when it's run away like maybe it has over the last few days or so, to see where we're going to end up. But I think if we did see something of a sell-off, the first place I would want my stop would be the other side of 84.20. We had this dip September the 7th, a week ago, just when it was breaking out of that downtrend, moved higher, came off 84.20, and then it zoomed another 100 points higher. So I suppose if you were really convinced it was going to move a lot higher from here, you could put your stop under this low here, 84.80. That's not personally one I favour, but for me, maybe the better trade is if we get something of a sell-off from these levels and it holds sort of 84.40, 84.60, looking to be a buyer with a stop under 84.20. I think if 84.20 breaks, it doesn't necessarily change the bias. I think just to see maybe how it reacts down at these levels again. But I do think the moves that we've seen in euro sterling over the last few days or the last week or so does point to a reversal. So for me, when it comes to looking for targets, I'd be looking for a move back up to those sort of late or mid-August highs. I think 86.50, 8700, that sort of area. So I do think that one we were watching from last week, euro sterling, does look to have turned the corner. So I think that's one to watch in the days ahead. I'd be looking to be a buyer on dips. The other one I think that we have a look at now and again is Australian dollar, US dollar. And again, I think this is another interesting one over the next couple of days. Let's take a look. I think we need to have a look at a really long-term chart first of all, and it's just to remind ourselves where we are, because we're at. If you're a fan of trends, we are at something of a big, potentially anyway, a big juncture for the Australian dollar, US dollar. Let me just click and get the line. So because the trend for the last few years, has, oh, hang on a second, I've done that wrong, has been down. If we took it from these highs, sort of March 2013, the trend looks something like that. And so you could argue that the strength that we've seen this year is just a dead cat bounce, and so far that 3-year plus trend line is holding any sort of further progress for the Aussie dollar. So depending on how you are positioned, you could say, well, actually, what we've seen, with it been trading up around about the 7,600, 7,500 level, it's an opportunity to go short against the trend, looking for a move back to 6,800. And that's definitely, I think, from a longer term point of view, that's definitely a valid trade. But maybe there's still a chance of a short term squeeze higher. This has been the moves this year. And I think it's really this 7,400 level that I think is the interesting one for maybe the short-term traders out there. So if we just maybe plonked a horizontal line just on 74, sort of down here, it's done a reasonably good job during the summer when we've seen weakness towards the 7,400 area of the buyers coming back in. And it's interesting that the day we had yesterday, we had a big sell-off. You can see by the red candle yesterday, a big sell-off off that level. And we have seen a bit of strength coming in. So I think maybe the aggressive trade here is to assume that 7,400 is going to hold again, and we're going to have yet another push back up through 7,700. In terms of risk rewards, it's a good trade. So I think if you had your stop the other side of 7,400, you've got, well, maybe buying now, you've got a 100-point stop and maybe 220, 230, maybe a bit more points upside. And maybe the more patient traders might want to see if we get a better pullback. This is on the hourly chart, and you could argue that correction from those highs above 7,700 is still going on. So there's maybe not the urgency to buy in just yet. But I do think the next couple of days, it is an interesting one to watch to see how it performs around this 7,400 level. I think Aussie dollar, US dollar. So I think they're the two for me at the moment. Actually, there's one more we'll come to in a second, but I think euro sterling and Aussie dollar. If we look at euro dollar, it's a little bit boring. So the euro US dollar. Let's have a look at the dailies so we can get a feel for what it's been up to. And it's just been trading a little bit flat. I think, there you go. Actually, that's on the hourlies. You can see it better on the hourlies. You can see it's something of a coiled spring, I suppose you could say, euro dollar. It's well underpinned by the 112 area, but it struggles to make much progress through 112.70. And it's a really tight range for the last few days. So I think until we see some sort of move out of that, there's nothing to get too excited about. Pound against the dollar has definitely suffered, I think, something of a reversal in fortunes recently. We've seen over the last week or so, we've seen it lose, 250 points. If we have a look on that, let's have a look on that, maybe at the slightly bigger picture. On the dailies, we did have something of a trend that had been in place for the last month, and the market sort of grinding its way higher with the odd surge along the way. So I was looking at this trend here, and there were a few opportunities on the way up to take advantage of that. But yesterday we saw it slip below that trend. Clearly, I think for the longer term pound watchers, these highs, the post-Brexit highs, post-EU referendum highs, around about 35.50, still a major hurdle. So it does seem to get quite nervous when it runs back to that 3,500 level. If we look on the hourlies, it's definitely, I think, a lot more difficult to make the bullish case for pound against the dollar based on the sort of the slide that we saw yesterday. If we drew our trend on the hourly charts, it's going to look, something like that, and you can see it how yesterday affected that trend. Let me get my level right. Let's plonk it on there. So I was looking at this yesterday, thinking I did buy in yesterday, thinking, okay, this is it. This is the start of a run back up to 134.40, but got stopped out when it broke below that low. I think it doesn't necessarily mean we've seen the end of the strength, but for me, it's one to maybe watch for a few days rather than do anything with. The fact that it's lost this trend line, does definitely negate some of the bullish argument towards pound against the dollar. And dollar yen, let's take a look at that. That's always, I think, an interesting one from a longer term point of view. Again, let's just remind ourselves what the long term look like. We have that significant downtrends that's been in place for much of this year. So again, if we put our line on that, our downtrend looks something like that'll do. So 108, big barrier, but on down here, as I've mentioned over the past couple of weeks, sort of 99 to 100 continues to do a good job of propping up dollar yen, and at the moment it's sort of somewhere in no man's land. So I'd say maybe the aggressive trade is if it drifts back on weakness towards 100, you want to be a buyer with a stop under these recent lows. If it rallies back up to sort of the 106, 108 area, then we're expecting it to run out of steam again. And if it breaks 108, that's when it looks like that trend is starting to change. But at the moment, I think it's just sort of stuck somewhat in the middle with not much going on. And one final FX pair we'll look at New Zealand dollar, US dollar, because we looked at that last week, I think based on a question from someone who attended last week. So if we have a look at, how big a picture do we need to go on this? Because we'd had, I think, something of a big trend. There we go, New Zealand dollar, US dollar. So we'd seen this trend that had been in place since December last year. Okay, and since we looked at it a week ago, it has given up ground, but it hasn't changed that major trend. So I think New Zealand dollar, US dollar is another interesting one to keep an eye on, because we've seen it come back off what the highest it's been in more than a year, which is bullish. You know, if something moves to fresh highs, it's a bullish sign. So again, there's maybe the trade in here is off this 7200 level. Let's flip it over to the hourlies and take a look. There we go. You can see, I think, what a good job the 7200 has done over the last month, all the way back to here. Whenever we've seen weakness back to that sort of area, the New Zealand dollar buyers have come back in and the price has recovered. So I think this is maybe another one, along with euro sterling, to keep an eye on over the next couple of days. Again, the aggressive trade here, assuming you think the bottom has already been seen, is to be a buyer with a stop the other side of 7200. Maybe the more cautious, and I'd definitely count myself among those, because it was only yesterday it slipped to this low. I'd maybe want to see, well, do we get a retest later on today or tomorrow morning and a bounce, sort of the start of a double bottom. So for me, that's maybe the more patient trade here, to see it, just to confirm or have at least another confirmation that maybe this 7200 level is holding. But I think New Zealand dollar, US dollar is another interesting one. So there we go. That's the FX stuff done. I think where most of the excitement has been in the last few days has been in the stock market indices. So let's start off with the Dow. So this is the Wall Street rolling market, which is the Dow, of course. But let's just remind ourselves where we had been. For much of the summer, we'd seen just a wide trading range in stock markets. After, again, the post-EU referendum surge, we'd seen markets just trading sideways. But all that changed on Friday. I think on Friday it was actually a great trade. I did trade it on Friday, but it was easy because it just went down all day. It went in one direction all day, which rarely happens. But I think it ended the day down 394 points, and the level that broke, I think was it 18,250, something like that. Let's have a look on the hourly charts. There we go. So that the low middle of August, 18,250 area, or early August, sorry, then rallies 400 points or so. Whenever we saw it sort of retreating back towards the end of August, towards sort of 18,300, the buyers would come back out and the move. So I was watching it on Friday and had an order just below 18,250 to sell, and the market just fell off a cliff, and ended the day in out of hours trading about 300 points below that level. So it was quite an incredible move. And then on Monday we had a move equally incredible in the opposite direction, not quite as far back, but we had the market. You can see these again. These are the hourly candles we're looking at. Every hour, it just went up into the close. So that was well, between 7 and 8. It stopped at 8 o'clock. It stopped and then just went sideways for the next hour, but did manage to poke out to a fresh recovery high. So I thought, well, maybe yesterday, when I was looking at it yesterday, I put it on Twitter. I thought, well, we just have a boring day. We've had this massive move down, a big move back up as well. Maybe we'll have just something of a boring day yesterday. But again, it moved a couple of 100 points during yesterday's session. But I think what's interesting going into today is looking at the levels that held yesterday. So let's have a look, I think, for the really short-term traders. Let's have a look at the 10-minute chart. Because yesterday, it was late yesterday, so from about, well, late in the session yesterday, from 6 through to 9 yesterday, you can see it's sort of around about the 18,000 mark. So whenever we'd see it drifting down to 18,000, this is on the 10-minute charts, we would see the buyers come back in. So at the moment, we're trading in the out-of-hours market 18,110-ish. If we see a move down to 18,000 today, it looks like an interesting level to look to be a buyer. And actually, I think that the 18,000 low was pretty much near enough the lows in the first 10 minutes from Monday. Okay, so it opened a lot lower on Monday during official market hours, but again, around the 18,000 level, it did prove pretty pivotal. So for me, the big levels to watch today and the rest of the week in the Dow, 18,000 on the downside. The ultimate level after that, I think, is the sort of the 17,900 out of hours lows from Monday morning. But this afternoon, I think the first one to watch is 18,000. And I don't think we're out of the woods yet. If you can see, we came back a lot on Monday, but it sold off again fairly sharply yesterday. And even though we did see the odd strong rally during the day, it didn't get back anywhere near to where it closed on Monday. So I think things, still look potentially a little bit precarious in US market. So let's see what happens. But for me, if it drifts back to 18,000, it starts to look interesting to maybe be a buyer. And conversely, if we get a rally, it will be interesting to see how it performs up around Monday's highs. Does the market have the conviction to get through? But I think after some boring summer trading, it's come as something about quite a rude wake-up call to a lot of people, the moves over the last couple of days. I still feel there's a bit of downward pressure on stock markets, but let's see what happens. I think if we lost that sort of 17,900 level from early Monday morning, we might have to brace ourselves for maybe a sharper sell-off. But the immediate level to watch, I think, this afternoon is that 18,000 mark. The FTSE is interesting. Let's look at the FTSE 100, because the Dow went crashing through its big level. 18,250, like I said, was the Dow's big level. But looking at the FTSE, it's still holding above the base of that sort of sidewaysy range that we've been in for much of the summer. So for the FTSE, it's 6,600 near enough. You can see the lows here in July, and then the low here early August, and yesterday. It traded down a bit yesterday, but didn't take out that 6,600 level. So again, if you were convinced that stock markets were going to go back up once again, then the 6,600 level, I think, is one to watch on the FTSE when it comes to having a stop. But I think it's all a bit too confused for me at the moment. We've seen a good recovery on Monday, but didn't get anywhere near Friday's highs. Slipped a bit lower yesterday. I think there's still quite nervous markets, but I think on the FTSE, 6,600 is going to be the big level to keep an eye on. Let's see what happens. And the DAX, we'll have a look at the S&P as well. Actually, someone's mentioned the S&P. The DAX, I think, is maybe just a bit muddled looking. The DAX, I think it's with the Dow, it broke its big level and fell off a cliff. The FTSE hasn't quite broken its big level. The DAX has had a sort of look through this level, and it's just chopping about. It seems to be waiting for everything else to make its mind up. So I think it's maybe the one that lacks the most clarity at the moment, I think. But clearly, it's all going to be led by the US market. So I think there are some obvious big levels to keep an eye on there. And someone said the S&P. So let's have a look at the S&P 500. The S&P, of course, is you could say it's a much better barometer for the US markets, because it's 500 shares. The Dow is only 30 shares, so the S&P, is probably the purer index. But again, it's pretty much the same as the Dow. As we'd expect, we had that big move on Friday that broke below the sort of 2160, 2155 level. The market rallied back up on Monday, but the old support sort of became resistance. And then yesterday we had, like the Dow, the market sold off a bit, but found some support late on. So I think, like the Dow, the levels to watch are those lows from yesterday. If we do see the market sell off after the open today, it'll be interesting to see if there's the same conviction today to be a buyer around about 2120 on the S&P as there was yesterday. So I think previous days highs and lows are always good levels to keep an eye on. Right, so lots going on, but I think the Dow and the S&P US markets definitely the ones to watch to try and see how market's going to perform after those big sell-offs on Friday. We'll wrap things up by looking at a couple of commodities. I think gold's an interesting one, but we'll start off with crude oil because I think that's not as interesting. I think it's difficult. I think crude oil at the moment because I think we looked at it last week and I think I had a similar opinion that it was difficult. It does look more up than down. We had the rally earlier in the year off those lows, those $26 a barrel lows, up to above 50 briefly in June. Then the market sold off again, and then we've seen a recovery, and now we're just sort of in the middle. I think for short-term traders, I think there's lots of support around about 44. This is the move in September from the lows around about 43 up to above 47. The market's come off, but you can see there was plenty of appetite, just a week ago to be a buyer in this sort of 43.80, 43.50 area. It's currently trading around about 44.90. So for me, if we saw much more weakness from here, I could be quite tempted to be a buyer. But I think it's one for maybe nimble traders, I think, because it just seems quite volatile short term with no real trends on the daily charts. Adding weight to the bullish argument, I think we talked about this last week, the idea of bullish divergence. So this is the RSI, the relative strength index. Traditionally, it's an overbought, oversold indicator. So anything up here above 80%, the market's overbought, and we should maybe expect it to slide. Anything below sort of 70% level, we should expect the market to rally. And with oil pushing lower and coming back to the same level, the RSI is actually trending higher. So this is a sign that maybe we've got higher lows on the RSI. So it's a sign that maybe the weakness has been overdone and it's time for a bounce. We'll see what happens. But I think definitely, for the shorter term traders out there, this is the zone to watch. These lows. If I just plonk a line on it from here and here as well, so that sort of 43.80 to 44.40 pocket, I think is one to keep an eye on. But gold is, I think, is interesting where it is at the moment. The price of gold. Let me just. There we go. Is it coming up? There we go. Just to remind ourselves, I've been talking about. What do I want? Do I want hourly? Maybe let's start with the bigger view. Let's go with a daily trend, because it's near a big level, the price of gold. So that's been the trend since December last year. We've come from a low of about $1,050 an ounce to up to $1,380 in July this year. And the market hasn't really gone anywhere for the last couple of months. But after drifting off, we did see in early September strength ahead of sort of the 1,300 mark. The market pushed up, it's come back down, and again we're seeing a bit of strength kicking in. So despite weakness over the past week and sort of nothing over the past couple of months, the trend for gold, I think, is still up. And for me, while we're above this line, while we're above 1,300, the bias is still, I think, to the upside. So for me, the expectation would be for a push higher, maybe up to 1,380, 1,400, assuming that the 1,300 lows hold. So it's trading at 1,322 at the moment. So I'd be definitely maybe leaning more to expecting gold to rally from here and assuming that trend is going to continue. we'll see. So I think there's plenty there to be keeping an eye on. I think the immediate stuff for me, euro sterling, is continuing what we were talking about last week, continuing the break of that downtrend. So expecting that to possibly move higher from here. Aussie dollar is interesting because it's that 7,400 level, which has done a good job of holding the market up. We're back down here again. New Zealand dollar, US dollar is arguably the better one than the Aussie dollar because the trend has been stronger ahead of that 7,200 mark. And this afternoon, going into this afternoon, because of the volatility we've seen in stock markets, I think if you're interested in stock markets, the Dow is one to watch to see if those 18,000 lows hold from yesterday. I think so. So plenty going on. This Friday as well is options expiry, options and futures expiry for September in UK and US markets, and you can normally experience a fair bit of volatility in the run up to that. So we could see potentially some bigger swings over the next couple of days. It's traditionally it's the third Friday of the month, so that's this Friday, and that's when the September futures and options expire in the futures market. So we can see a bit of craziness going on in the markets. But for now, we will wrap things up. We'll do this all again next week. But if you have any questions in the meantime, you drop me an email, david@tradeafter.com. For stuff on social trading and other market stuff, you can have a look at my website, which is tradeafter.com, and you can follow me on Twitter for charts and little updates during the day. But for now, that's it. So until we do all this all again next Wednesday, I hope your trading goes well and enjoy the rest of your week.